Maybe we can figure out where we're going. Maybe that's what I should say. In terms of grain market drivers, there's several things that I'd like to talk about that are in play that I think you'll see patterns that are representing these forces all throughout the way that grain markets have been moving the last several years. In terms of drivers, soybean exports, in general, there have been some good studies in our profession out of Purdue, elsewhere, that have indicated that if you go back to about 1998 and look at what's had driven our time of great expansion in usage and in prices for corn and soybeans in particular, we had soybean exports to China and ethanol use in the U.S. have been primary drivers in grain supply demand. And so that this demand pull has caused prices to move higher, caused acreage competition each spring between corn and soybeans in particular, and higher crop production. And we were having higher crop production at the same time that prices were continually, because of the demand, pulling things higher. Transportation logistics have impacted grain exports, and not domestic logistics. That's for sure a case here in Kansas, but really international logistics. The development of sizable supplies, increased production, willingness to be an export competitor in the Black Sea region, in Australia and other major competitors, has at times, because of lower transportation costs, put the U.S. out of a competitive position, particularly in the wheat market and in some other markets as well, but particularly the wheat. We're watching here in the United States what could happen to our export competitiveness to Asian markets with the Panama Canal expansion. Possibility that instead of shipping as much grain as we do to the Pacific Northwest, that all that much more might come south, might come through the Panama Canal on more efficient vessels. Of course, vessels from South America also go through there. So we'll have to see how it all finally plays out. But this is a factor in the next 1 or 2 years that probably brings some dynamic change to the markets. Wheat has increasingly substituted for feed grains in world livestock feed markets. It wasn't that many years ago we wondered, gracious, with the shortfall in coarse grains, whether it be corn, barley, whatever, grain, sorghum, how will livestock feeders respond internationally? Well, they responded pretty well. They got used to feeding lots of wheat in their rations. And feed quality wheat has always been around, coming from some suppliers, but at this time, you kind of brings in the idea of food versus feed quality wheat, the degree of adoption of foreign livestock feeders to the use of it. And a country like Ukraine has a lot of feed quality wheat that goes out, and it does affect the feed grain markets. U.S. grain exports have been limited by the U.S. dollar. And you've heard this mantra now of late, so no surprise to you. More impact on wheat, with several alternative places to go in the world to get wheat than for corn and soybeans. Again, so we can go anywhere in the world, almost anywhere, amongst a lot of places to buy wheat, but if you're going to buy corn or soybeans or grain sorghum, South America, Ukraine, for grain sorghum, Australia, aren't that many places you can go, so there's kind of more of an inelastic demand, you might say. But for wheat, it's more elastic in terms of where people can go, in terms of market relationships, and wheat has suffered the most of our commodities that we grow. And Alan Featherstone asked me, well, are you going to show a drought map? No, I'm not going to show a drought map. Ellen Taylor's going to come. I'm going to let Ellen talk about that stuff a lot better than I can. But I'm going to show this chart, the increasing value of the U.S. dollar. And again, so someone from another country wants to buy a U.S. commodity. They take their currency. They go into the market, trade for dollars, because these things are denominated in dollars. The high value of the U.S. dollar has made it more expensive to buy U.S. grains. And you can see this is no small issue. Pretty sizable run-up, and it doesn't seem to be going away. And furthermore, if again, not a macroeconomist, I think I would ask Brian to comment more on that than I could, Brian Brigham. But if the U.S. Fed does end up in at least marginally move towards raising interest rates, all else being equal, I think that's probably going to make that even more exacerbated. Fair statement. It's not going to make it weaker anyway. Okay. I'll let Brian comment on that later. In terms of grain price behavior, there are big things afoot. And that prices tend to return to break-even cost over time. In economics, we call this mean reversion, or maybe we should call it zero profitability reversion, or there's just enough profitability to keep people in business. So high grain prices and profits lead to economic responses that eventually cause lower prices, and vice versa. And this is what, if you go back to 2005 and see what's happened on our run-ups and our shortfalls, with a few droughts and short crops thrown in, this is what's happened. We tend to make money on things, so what do? We tend to produce more of it, tend to cut back usage, tend to end up in lower prices than when we have a time low prices like we're in. What are we thinking about doing? Well, gosh, corn prices are $3.40 in Hutchinson. If we can plant less of it, we probably will. Usage, if you're a cattle feeder or ethanol plant, you're saying, man, it's $3.40 in Hutchinson. So you're using more. So we've got forces in motion already to take us out of this, and we'll talk a little bit at the end here about kind of the tripping over ourselves effect that can come in when in the longer run, when you have low prices that encourage the demand base builds up, and as long as you keep producing decent crops, things are fine. But it doesn't take that much with an expanding demand base and some type of moderation or shortfall in crops to see a pretty explosive price move on the other side. So that's something to think on. The demand base we're setting up is laying the groundwork for the price recovery that you see later on. Market response to supply prospects and prices. And I'm hesitant to lay this out before my AgriCon colleagues, but I think when we're looking at this time of year, heading off into a harvest, prices tend to respond to supply prospects. So we call it price flexibility. So during this time we're responding mainly to what the size of the crop might be. Once the crop gets in, we sort of shift our focus to more of an elasticity-based view, and we start to look at usage responding to prices. So we kind of respond differently at different times in terms of the seasonal framework of how prices move. Let's talk about wheat markets. So we have large supplies. It's a buyer's market. Record world supplies and usage forecast for this market year by the USDA. And we've had 3 consecutive record high years for wheat. Does that mean demand has changed? Well, not necessarily. Demand relationships might be staying the same, but we have more supply that we're trying to chug through the demand relationship. So we have lower prices. And we have varying crop prospects by country around the world. Some, these are going off the USDA projections, projected higher crops in several countries. You can see there some countries with lower crops projected: Canada, EU, Pakistan. And right now, those that are coming are outpacing those that are going. So the world wheat exports, and when you look at what we do in the U.S., we have very consistent food use. We have some variation in feed use. So what really drives our prices are the exports, because we're putting out the door about half of what we grow, or a little less, is exports. So world wheat exports are likely to remain a buyer's market until or unless something happens to change the current large stock, high supply situation. And U.S. world crop uncertainty in 2016, and we have an El Nino situation we're unwinding, and couldn't be a better time to have Elvin Taylor come in not too long from now to talk about what these type of trends might typically bring us in terms of both here in the U.S., what type of growing weather and crop sizes we typically see. For wheat, it's been pretty strong downtrend in the wheat market. These are checked this morning again, just as Glenn had done, being dutiful is what we do on Outlook days. Price this morning for Kansas City December wheat, $4.96. And here, this is running weekly from back in 2014, 15, had got up to the high side about, it seems like a distant memory, 2015. At one time we were about $8, unbelievably. Seeming now that's right. In 2014, high 2015, got up to about 7. Our high this summer was about 6. And since then, particularly with the dollar issues, poor exports, we're down now as low as we've been in several years for wheat. And I think this is the issue of perspective I want to lay on you. When you look at the world wheat supply demand use figure and look at what the 2015-16 forecast portrays in terms of beginning stocks, production, total supply, food use, feed use, total usage, ending stocks, every one of those is a record high. So you have a lot of supply in the world wheat market. We've had 3 consecutive large crops in the here in the world, and stocks have grown. And this stocks use figure is a 6-year high. And if you're a buyer, you don't have to struggle very much to go find wheat to buy. In fact, there was an article came out that explained what Egypt had gone through in the last one of the recent purchases. They had indicated to the market they wanted to buy some wheat. They had wheat being thrown at them. People just wanting, with other countries from Europe, elsewhere, trying to get them to bid on to give them quote sweet deals so they could buy their wheat. So this is a buyer's market, and you can see here the 3 consecutive 1 record years, 2 record years, a third one in a row, although not growing, pretty much sideways. Usage continuing to grow pretty much. This little blip here, they pay people like me to really try to dissect and figure out what's going on. This seems to me to be about the time, here about 2011, 2012, when we took a big step up in wheat feeding. It just kind of stepped up and have kept going in terms of the use of wheat as a feed stuff here in the world. 2% growth over time for wheat usage, 2.3 for production. Trade up and down. In essence, we've gotten to a place on world stocks where we've gone pretty much sideways, and then this year jumped up again. So it's a supply-demand issue, lots of supply. And demand not bad, demand still growing, but at current it's outracing supplies. And in terms of world wheat exporters, for us in this current year, Russia projected to be pretty high for their exports. Kazakhstan, so. They're kind of they export mainly to countries close to them, Iran, etc. But Ukraine, growth in their exportable projected numbers. And you can see other changes around the world. A little lower for Canada with crop problems. EU down a little bit. Us up a fair amount. But these logistical issues are coming into play. When these folks have wheat available to hit the Middle Eastern markets, then we can't compete with them very well, particularly now with the strong dollar. World wheat stocks demand, again, growing stocks, just indicative of a high supply situation. For U.S. wheat exports likely to remain weak until the dollar situation could change or the world stock situation changes. And you see this repeated statement about crop uncertainty in the next year. Spring wheat, projected record yields, large crop forecast. We had a hard red crop projected to be, with the U.S. Wheat Associates recorded numbers, about 12.3% protein, down about 1% from last year. Test weights about 59, down about 1.8 from last year. Some damage, about the same damage as last year. The soft red crop, about the same protein as last year, lower test weights, and a lot of damage. 3.4% versus about 0.9 last year. So all the rains they had, disease issues really affected them. Wheat production, 2015-16, planted acres, harvested acres, yield, production. Really no surprises there, just showing you those numbers. Spring wheat numbers. The main thing to look at is this issue here. Spring wheat projected in North Dakota, projected to be a record high yield. So things are as they go. Again, you can see the growth we've been having here in U.S. wheat production. Low exports this last year, 854. We're hoping we move higher this year, but the low export numbers as low as we've seen in a good number of years. The stocks to use for wheat, the world world stocks were going higher, so were the U.S. figures. Again, large supply situation. U.S. wheat ending stocks prices, the USDA's projection about 510. The USDA also, if you know where to look for it, gives a futures-based projection of prices. Their futures-based projection of prices as of August 6th is about 473. So this is even optimistic. So there's a gentleman asked me, well, should I sell my wheat now? I can't remember. Yes, right here we were talking about that. Well, the futures and a lot of the factors right now, until we would get some turnaround in these factors, things are looking not very good for wheat price outlook. And you would hope that just variability and volatility give us some opportunities, but when the futures are even more optimistic than the USDA's pessimistic forecasts, things just aren't looking very good for wheat market outlook. And U.S. wheat versus world stocks to use, supply demand works in terms of world wheat percent stocks to use versus prices, and these are nominal prices, not adjusted for inflation. But we're tending to respond pretty consistently along a plane of world stocks to use versus prices. And we've been going from 2012 to 13 to 14 to 15. So I don't know that demand has changed that much, but we just have a lot of supply. Let's talk about corn and sorghum markets. We have larger supplies, and again, buyer's market. Yes.
Is this gluten-free stuff hurting our wheat consumption and market perception?
The general discussion and talk. Probably the safe answer says on the margin. I'm sure it probably affects some people, but overall, I don't know that people are coming in and out of grocery stores in the communities. Well, in Kansas, probably not that much. Often more in centers of the country that are all that much more heightened in their awareness of this and that. It may be. I have not heard any broader market discussion saying that, gosh, our food usage for wheat is going to be chopped down 5 or 10% because of gluten-free issues. I think it's more of a very marginal impact, at least at this time. Records, world supplies and usage in 2015-16. 3 consecutive large world coarse crop years. Large world coarse grain crop years. Coarse grain includes wheat, corn, barley, oats, all combined, millet. Just like wheat. 3 years in a row. Large crops. Varying crop prospects. Again, this looks familiar. Same situation. Some comers and goers in terms of crops looking good, crops not looking so good. One thing to remember is some of these crops for this 2015-16 marketing year haven't been planted yet. So Argentina, Brazil are crops that are just projected by the USDA to be great, but be strong. But again, they're all out there in the future. If an El Nino comes in, causes lots of wet weather, plays havoc with South America, which it has in the past, then these numbers could be at issue. Coarse grain markets likely to remain a buyer's market. We've propped up supplies. What will be our production off down the road? We keep having consecutive years of strong production, then it's hard to see a quick way out of the current low price situation we're in. Corn futures, you can see this is weekly futures. In terms of the December close this morning at 381. We had a rally recently up to about 440, 450. came back down to about 350, 355, and are now about 381. Cash prices for corn at Hutchinson area about 341, 345. New crop bids 347. There's a 371 out there with an export-oriented buyer. So everything below is 375, 375, 350. And this chart looks about the same as wheat. You see a lot of record high forecasts for production for supplies. The record production was last year for corn. Usage strong. Second highest export trade is on record last year. Ending stocks, fourth highest, third highest. So again, if the market tries to look positively, what's it see? It sees large supply scenarios, and until that would change, it's hard to get prices to have a different perspective. Again, world corn supply, stocks to use, strong growth, really pretty consistent. With the large crops we had last 1, 2, 3 years, we had a jump up in usage. Some growth, and growth with basically a moderation in trade. Ending stocks had been bouncing along 130, 140, and then the last 3 years with these large crops, now we're sitting around 185, 197. So when the market just wants to get excited, if some are optimistic, it comes back to these fundamentals, and it's hard to push the envelope against that. World grain exporters, U.S. is still the strongest, still with our low prices, still a strong, even in spite of the high U.S. dollar. Growth expected in U.S. Coarse grain exports, that's corn, grain, sorghum, all together. Barley as well. But you can see some others are having some variable figures. When the world wants to buy coarse grains, it comes to Argentina, Brazil, Ukraine, and to Australia mainly for Gary will talk about probably barley and grain sorghum. Who buys it? North Africa, Middle East buys a fair amount of it. European Union, China. So we talked a lot last year about grain sorghum exports to China. That phenomena is reflected here in terms of coarse grain, a combination of all that China brings in, and you can see the jump of about 9 million metric ton a year. The USDA is projected for this coming year that's not going to slow down. You hear policy pronouncements from China in the last several months. Any ag policy pronouncement out of China is pretty cryptic. So you see about 2 paragraphs. They say, well, we're going to consider, we've got a corn stocks problem. We're going to remedy that. Okay? And so the grain sorghum market responded to that. Well, here, another pronouncement came out just yesterday saying, well, we think we're going to wait a year on that. So whatever they're doing, their internal stocks policy is a factor in all of this, and it doesn't, at least with their public pronouncements, it doesn't seem like, at least in the short run, they're planning on heading a different direction with it. But in the long run, they do plan on it. U.S. feed grain market prospects, strong U.S. sorghum exports to China to continue. The USDA projected, I think, 350 million this marketing year, 390 for the next one. So they're all in terms of what they're expecting grain sorghum exports to do. And you can see low corn prices have supported domestic use, livestock feed use. You can see either high or record highs for livestock feeding, ethanol usage. Exports are actually not as high as they could be. The high was 2.4 billion bushels with about 1.850. We've got enough going on here in terms of other domestic uses that it may be crowding out some of the other exports. And we'll still have uncertainty about the 2015 crop through harvest. We could spend a lot of time talking about what we anticipate this 2015 corn crop will be. And there are questions to be raised. And the planted acres number could come lower with some prevented plantings earlier. Take 1 million acres off of eventually harvested acres times a yield of 168 bushel an acre, 160 or 165. A million acres times 160 bushels an acre is 160 million bushels. So that's what you're talking about when you start playing with acres. With yields, this number, the trade was anticipating something 3 or 4 bushels less than that. The USDA is very disciplined, very rigid, very procedural in their projections. What they considered in that August report on August 1st gave them exactly the number that they got. And there's no reason to doubt that that's the number that their projection would give you. There is reason to doubt that when they start to consider other things as they move through the season, prevented planting, other actual ear weights and whatever, that number could come down. There's probably some expectation that the yield number may come down. For all the places that were drowned out in May, June, and where they had problems in production, are they offset by the great rainfall that we've had every place else or not? That'll be the issue. Production projected to be 13.7 billion bushels, down from last year's number. So is this going to end up 13.5, 13.4, thereabouts? Either way, if you shave 1 or 2 or 300 million bushels off of that, you're still at 1.4567 billion bushels in carryout, and not appreciably changing where we're at. Corn acreage. So here's where your megatrends come in a way. That's an overused term, but you can see we've been declining corn acres for 1, 2, 3 years in a row. Yields, we've got anything but stability in terms of corn yields. Record low in 2012, jumped up, record high. Projecting this, the trend yield's about 162 in terms of longer-term trend. So when we grow corn, we don't know exactly what we're going to get. We know what if it yields according to its genetic potential, it's heading up into these areas. But we've had several years where it hasn't reached that. Production. Again, here's that short crop, 2012, 13, 14, 15, a little bit lower. Just show this. So we had the August crop report. When there's a little hashtag or whatever they call this now, on here you've got record yields coming in those northern states for corn. And in terms of an objective yield, you look at ears per acre times pounds per ear, and you're out here in terms of historic relationships. You're the second highest year on record. So we'll see. So question for Elwin is here. Talk to him later. So the thing you'd say, well, is we've had kind of cool. Are we going to have maturity issues for corn? Total growing degree days. These, in terms of total accumulation, you can see the map through time. The farther along down here, a little slower down here. That doesn't matter as much as this, indicating whether we're behind or ahead. And so far, the growing degree numbers aren't indicating that the crop is slow. Now that maybe we're being fooled or whatever. Maybe we'll be cool all the way out. I don't know, but at least according to this chart, we're not behind yet. Corn supply use. Low prices have pushed up the ethanol production numbers. Feed residual numbers are doing pretty strong. Season average prices have been trending down from the highs. Stocks to use for corn. You can see from the low we had in 2012, we've basically recovered nicely and are now at this place to where we have more than abundant stocks. From 821 at the low to 1.7, 1.8 billion bushels. Not really worried about things. Stocks to use and prices. Here are our high prices. 689 we had in 2012 have come down off of that and are now struggling below $4. And the corn market has a lot of, it's a pretty volatile place. It doesn't take a lot of change in U.S. corn stocks to use to get explosive prices. So we build a demand base, we keep going forward, build up livestock herds, ethanol plants going forth, no problem. We have export markets, people in other countries liking to use corn, etc. And then we come in some year with a 2016, 17, somewhere where we ratchet back 500 million to 1 billion bushels. You're not that far away from a pretty strong price response. But that's not here yet. It's on nobody's radar. But that's what you'd expect. For sorghum supply and use, there was a time in the U.S. in the world in the U.S. we grew a lot more grain sorghum, and then corn substituted for it. But now, when you look at the 2015 forecast for sorghum, we have world production highest since '96, supply since '87, usage since '96, record total use projected, export trade high since 1980. So ending stocks, you can see on the world side, we've seen a strong response on the world export trade side, and so as China's come into that market, where does this play? You see it right here on the trade in terms of the last 1, 2, 3 years of world grain sorghum exports, world grain sorghum usage. We've seen a response in world grain sorghum production, and stocks are still moving sideways. So it's what's happened with one country and their ag policies has affected in a big way the world dynamics for the grain sorghum market. And there's some things that have happened. Yes, for exports, you see we were in 2011-12 about 63 million bushels, 76 in 2012-13. Then we jumped 13 to 211, 350 in 2014-15. And pardon me, it's either 430 or 390. I think that to double check that number. It's high. It's higher than this. I think it might be 390. I might have an error there. But one thing that suffered is our use of, as we've slugged more grain sorghum into exports, we've cut back ethanol usage on grain sorghum dramatically. So grain sorghum exports have crowded out other uses of grain sorghum, in particular on the ethanol side. Let's talk soybeans, and we'll finish up. World soybean market levels, again, large supplies, a buyer's market. This is a repetitive theme. And 3 consecutive large record crops of world soybean, just like wheat and just like corn. So we've had good crops in the world, and we've had them all consecutively. And so we have low commodity prices. Varying crop prospects by country. Again, no surprise there. Lower projections in U.S., Argentina, and China. Again, the Argentine crop hasn't been planted yet. Neither is the Brazilian crop, Paraguay crop. So world export tend to be in a buyer's market. And really, there's just a consistent theme in these markets. We've had several years in a row of good production and large supplies and low prices. Futures, soybean futures have this morning they're about 905. Had gotten up here in July to about 1040. Have come back down to that level now. Basically wondering where we're going to end up heading into harvest. World numbers for forecast for 15-16. Records. No anticipation of anything that would change where we're at. So pretty pessimistic heading out into the future. Projected usage, strong usage without a blip, moving higher, strong crops the last couple years. Again, record high production, record high use, growing exports, growing trade. Almost all this. About 90% of this run up from here up to here has all been coming through China. And with these things happening, ending stocks heading to record highs as well. Exporter sales, Brazil with their strong crop overtaking the U.S. in terms of export sales. Argentina moving a bit higher. They're complicated by internal ag policies. And in the U.S., we're down just a little bit. The rest of the world moving along there too. You can see the growth in China exports from about 50-some million metric ton back in 2010-11. They've grown to about 75, so literally a 50% increase in terms of imports. Some growth in the EU, and actually what's a little surprising is China's been growing at 10%, but the rest of the world outside of these main users has also been growing. So low prices tended to help usage. U.S. market prospects, U.S. dollar affecting soybean exports as well as other things. Really, Chinese import demand, South American crops will be the game of factors that we'll be watching for the next bit of time here. Low prices have supported U.S. soybean usage, record high crush, second high exports ever. Uncertainty about 2015 crop harvest. Again, the trade probably is thinking that prevented planting may take this down 1 or 2 million acres and affect that in the same way. Yield, 46.9, thinking that could be high. So if you drop 1 million acres at 46 bushels per acre, 460 million bushels, that's 46 million bushels, excuse me. You're starting to affect some things, but you still have a lot of ending stocks. Production, so this could be more like 3.8, in the most extreme 3.7, 3.75. Soybean acreage, big jump in the last 2 years, 14 and 15. Yields really jump, first and second highest yields we've ever seen. Production in the U.S., record high last 2 years, one record on top of another. In terms of soybean supply use, again, you can see 3.9s in front of our crop size as opposed to 3 to 3.3. And so we have responded to profitability and increased supplies. Crush and exports and moving to the high side on both of them. And with all that happening, prices have been declining, now below $10. So stocks jumping up strongly. Prices responding to the stocks movement higher by cascading lower. The U.S. market shifting around? What's happening? Well, it seemed from here 2012, we were at, here you can see 2012, 13, 14, 15. So we seem to be, higher stocks are leading to lower prices, but a lot of gyrations, a lot of moves happening in that market. We grow cotton in Kansas, southern Kansas. I want to mention cotton. You can see that it's interesting to look at for the world market how much of the ending stocks of world cotton is held by China, 60-some%, 38 for the rest of the world. Cotton acres moving to the lower side. Cotton production at a base, but generally moving downward to sideways last several years. Big issue is that prices are projected just to be so down from where they had been in previous years. Well, thank you for hearing me out. I think that the longer term issues that we're dealing with have to do with how we view the current low price, large supply situation. Is this sustainable in the long run? Is this the new norm? Are we into commodity price deflation? That as you just read market commentary, those are the questions asked. I don't know if I would jump on the commodity price deflation bandwagon, but rather, particularly for grains, but rather you can look at the growth at large supplies and how that's led to, yes, increased usage, but growing stocks, no hurry, no worry on the part of buyers of these commodities to have to come in and hand over fist try to pull something away from anybody else. If they don't buy this from you, we'll just buy this from over here from somebody else. That's just the definition of a buyer's market. And will we always have, is this the new norm or not? I guess on the production side. But if you go back to 2005, we've had periods of several years of tougher conditions, several years of better conditions. I'm inclined to think that we're probably that will not always have great crop production conditions. But the challenge is that we're probably dependent on something like that, on some moderation in production to get us out of the current low price situation that we're in. Well, very good. Let's take some questions.
In previous years where you've had a price reduction in crops because of oversupply, has the dollar, or did the dollar play as big a role in those reductions as it is today?
The question was, in previous years when we've had large price declines, did the U.S. dollar play a role in some of those years? There was a lot happening in 2007, 2008. I'm trying to think through that again. Remember, before we were coming into a presidential election, and oil prices were strong, and they were generally oil prices were responding to the dollar. That oil would go up, the dollar would go down, etc. And then we came into that fall, and so much crashed, including the grain markets, that again, kind of going back to this study out of Purdue that Tyner and Hurt and Phil Abbott put together, their implication was that yes, but what we saw in terms of ag was Chinese imports of soybeans and ethanol, and the U.S. having a lot to do with it, but that the commodities played a major role. That currencies currency fluctuations, value of the U.S. dollar played a major role in what was going on, if not directly, at least indirectly, as it was affecting, energy and affecting ethanol.
Your one slide showed this trend of the dollar going higher.
Yeah, I was just wondering if I'd get back there without having to
we've
do the world.
Over 100, and if it goes over 100, we still have this big glut of overproduction. It appears that those two may kind of work in sequence, one going up, the other continue to work.
I think when it affects corn and soybeans marginally, just because the world cannot go, there just aren't that many other places to go to buy these crops, even grain sorghum. But for wheat, again, lots of places around the world, some with pretty weak currencies, the Russian ruble, you name it, that have very weak currencies right now, and the high dollar versus those weak currencies just really hurts us in terms of export, and that's really noticeable on the wheat side. Good question. Just too many clicks to get there.
Let's do something for you. Is there other questions? What slide is it?
It's way at the very, very beginning. Thank you. Yes?
Can you talk a little bit about how the index funds swing and the commodities swing may affect how the prices swing? We saw that at the end of June when they jumped in and the price went up 30 cents a day.
Mm-hmm. A lot of times I have a slide. I don't have it up here this time. But that has Dale Dirkholtz out of AgriVisor puts together a great slide that looks at the index funds, which are kind of formula-driven critters, as opposed to speculative people, and then the commercials, which are basically hedging actual use. And the index funds, as they change their percentages, they'll affect things, but over time, they've been more of the consistent player. It's been the in-and-out speculative funds. And there's a really good commodity analyst, works for DTN, Darren Newsom. Darren's fairly critical of USDA numbers overall. A great guy, but we need skeptics, it makes the market work. But his issue was that in his idea, he thinks the in and out of speculative monies plays such an issue that what's really needed for a rally is for investors to want to come back in and get involved in the grain markets. My contention with Darren is that, yeah, I hear what you're saying, Darren, but they have to get in because they see something happening. So which comes first, chicken or egg? And So you asked a straightforward question. The index funds, they may have a 20 or 30 cent impact, but it's not a big source of volatility, not as much as the speculators getting in and out of the market because they think there's a buy or a sell opportunity.
And I've got that dollar story.
Yes, thank you. And here's so what was happening? Yeah, real low dollar, 2008. These are monthly charts. So this was about December. Yeah, when that dollar jumped up, at the same time commodities were crashing. So
What's inevitable that you don't get that's behind?
on the U.S. dollar,
If that's the case, you're going to see, further weakness.
if the Federal Reserve follows through and if everything else is the same, and that's a big assumption. If everything else is the same, the Federal Reserve raising interest rates would tend to take us higher. But will everything stay the same? Will people flee from it? That's always the backdoor caveat.
We still have a few minutes, so go ahead if you have questions for Dan. He'll be around this weekend too.
Yes.
Dan, did you say that we are behind or ahead on the
I said that that according to these numbers, and I'm not sure I believe them, but they're the official numbers. They're indicating that we're not behind. Now we've had walk out, get up this morning, and it's 65 degrees. And I think, gosh, I'm not sure what I think of all that, but at least the official numbers in that equation that they use from 55 to like 85 degrees indicates that growing degree days are not behind. It's pretty cool. I wonder personally about maturity of the crop, and if not that, particularly how we're growing a lot of grain sorghum, and grain sorghum does respond well to cool fall temperatures, and I wonder how that's going to play out.
Go ahead. Still have some time here. Lunch is ready, so don't worry. I'm not holding you away from it, but if you got a question, go ahead.
Well, with that, I'll be around, and I appreciate you hearing me out. Thank you very much.
Thanks, Dan.